Hello, everybody. I'm Gary Massa with Massa and Associates, and welcome to the Syndication Investment Edition of Tips Tuesday. Today, we're talking to our investment-minded friends, investors, landlords, etc., who have all had some challenges in the last year with their investment properties or their rental properties, or the newer investor who's been looking to get into the market but realizes the margins are so super thin they have to do something different. So investing in San Diego is maybe not the right choice. So let's talk about syndications today and what that is and why that might be a good strategy to consider at this stage in the game. The last couple of clients that I've been talking to have all been long-term landlords. They've had multiple properties over the last many years, and this last year was very challenging. Number of reasons, as you're already aware, with the pandemic and people's losing jobs, not being able to pay their rent, they've really been having to struggle to keep the flow of income going through, something that they've never ever thought about before and had to experience firsthand over the last year. Now that they're able to get their tenants out or sell their properties, etc., they're basically just done, right? And so, we were having conversations with a lot of people that are long-term landlords that, they're kind of getting to the point in their life where they're like, you know what, I've been dealing with tenants, I've been a landlord for many, many years, and I'm just tired, and I just want a very easy investment that's going to pay for me. Just pay me rather. And so what can I do? And the other conversation is, if they're looking to get a different type of investment here in San Diego County, something local, it's because of the way the prices or where prices are going and the competitiveness. If you are able to secure a rental property, even if it's all cash, the margins are typically razor thin. So what can you do? Well, you can invest out of state, right? And so that's one option. Another option is, especially if you want the low maintenance, the hands-off type of investment that's going to pay you a very consistent, dividend, basically. That would be one strategy is syndications. As a lot of you know, I started down a path of exploring into multifamily apartment buildings a few years back, and paired up with a group out of Arizona that's doing an incredible job on syndication investments, and I've been involved with at least one of them. Personally and professionally with them over the last year and a half, a little over that. So had some experience in this, and a lot of the conversations I'm having with, my clients, just giving them this option seems to be a really good avenue for them to invest. So I wanted to share the information with you today in regards to that. So first of all, what is a syndication? It's basically a group of investors who have all bought shares in the profit of a real estate building. Normally it's a commercial building or a multifamily apartment building, where the principal and their group have identified the property, basically purchased it or set it up for the purchase at one point or another, and devised a plan of how to improve the building and improve the revenues and the rents, basically, which will improve the revenues and ultimately improve the value of the building. And there's a couple different ways that investors are paid in that. Basically, a straight ROI percentage based on the profits, where everybody shares some port, whether it's equally or some, they share some port of the profits. So sometimes it could be better, sometimes it could be worse, little higher risk, little higher reward, ideally. The other is a preferred return, where basically there's a structured return, which may not be as high, but again, it's a very consistent and attractive return, where most of it is paid, typically half of that return is paid, monthly, in monthly returns, and other parts on the other half of it paid on the back in a lump sum, annualizing, a certain percentage. So again, every investment's different. We can talk about certain situations, but generally speaking, that's what that is. And the principal group basically maintains the property. They do all of the management. They manage the managers. They manage the finances. And so the investors who invest into the projects, basically, there's little or no work that they have to do. They're just basically collecting the dividends on that. And it's tied to a physical piece of real estate, which a lot of people like more than just going into the stock market. So another great option to consider. So now if you're in that boat where, you have either a handful of or one investment property and you've had challenges with the tenants, you're done taking the midnight phone calls and dealing with all the repair requests, etc., from the tenants and turnover, etc., and realizing that maybe they're not as profitable as you wanted them to be, or you're just done dealing with all of that, or you're a new investor. There's nothing wrong with submitting your investment into a syndication, typically it's about $100,000 to make some really good structured profits. And it's usually about a 3 to a 5 year investment term to help just grow your money in a typically a more secure environment. So if you're in any one of those situations and you would like to talk a little bit more about syndications, it is a great strategy. Maybe not the perfect one for you, but it is a strategy, and I'm happy to help explain those details a little bit more, again, as I'm helping some of these other investors make those decisions where to go with their money once they're able to sell their properties. So happy Tips Tuesday. Hope you've got some value out of that. Again, please leave a message down below. Call me if you have any questions or to get some more information. Happy to help. Until then, until next Tuesday, have a great day. We'll see you soon.